Okay. Okay, welcome everyone to the FSCA webinar. My name is Ndivhuwo Mulaudzi. With me is Moreku and Tshepo Sebolai. We are from the Financial Advisors and Intermediaries Department. We're responsible for supervision of Category 1 and 4 FSPs. So today's discussion will be about compliance requirements with regards to the submission of financial statements for funeral parlors that are authorized as an FSPs. As a department, we have noted that most of the funeral parlors collect premiums on behalf of insurers. So our discussion will specifically be directed to those FSPs that collect premiums on behalf of insurers. Colleagues, are you ready?
Yes, we are ready.
Yes.
Okay. So Fortune, when is a funeral parlors, which is an authorized FSP, required to submit financial statements?
Okay, thank you, colleague. The funeral parlors are required to, not really the funeral parlors only, all FSPs are required to submit their annual financial statement 4 months after its financial year end. And we have noted that the funeral parlors sometimes forgot to submit the financial statement, of which each and every year actually they are required to submit it.
Oh, okay. Thank you. Mr. Sebolai, what can the FSP do if they were unable to meet the deadline, the submission deadline within the prescribed 4 months?
Thank you, Ndivhuwo. There is a process in place with regards to this situation. What the FSP can do, they can apply for extension of submission of the financial statement. So that request must be submitted within 15 days before the due date of the submission of the financial statement. For example, if the financial statements are due at 30th of June, we prefer that we receive that request before the 15th of June.
Okay. Thank you so much. Mr. Moreku, what is included in the annual financial statements?
Okay. The annual financial statement consists of income statement, balance sheet, statement of retained earnings, cash flow, and explanatory notes.
Oh, okay. Thank you so much for that. Mr. Sebolai, are there any additional returns that must be submitted with the financial statements?
Yes, there are additional returns that must be submitted with the financial statement. For example, the FSP would also need to submit what is called as Annexure A. This one is referred to in Bot Notice 82 of 2015. And then they would also have to submit Annexure 6. This is called the liquidity form. That's where they calculate the liquidity. They would also have to submit Section 19.3 report. Section 19.3 reports or report refers to that report that relates to the separate account into which premiums are collected and can be prepared by an accounting officer.
Thank you so much. Mr. Moreku, what is the purpose of the Annexure A?
Thank you. Okay, my explanation of this, it will be specific about the federal palace, not the general FSPs. So with regards to the federal palace, it is an exemption of eligible FSPs limited by product from requirements pertaining to submission of audited annual financial statement. In short, what we are saying is if the federal palace decided to submit the Annexure A, they will not be required to submit an audited financial statement.
Okay.
They can submit annual financial statements that are being prepared, compiled, or reviewed by an accounting officer. Thank you.
Thank you so much. Mr. Sebolai, what is the purpose of Annexure 6, Form A, also known as liquidity calculation?
Well, the purpose of the liquidity calculation is basically to enable the FSP to test its ability to pay its short-term obligations so that's where they would need to compare their liquid assets together with the total annual expenditure. So that's the purpose basically of the liquidity calculation form.
Okay, thank you so much. Mr. Moreku, are juristic representatives required to submit any returns to the FSP?
Yes, juristic representatives are required to submit the Annexure 6 Form A within 45 days after every half year end to the FSP. So they need to submit this form to the FSP, not
Okay.
the FSCA, or yes, they need to submit it to the FSPs.
Okay, thank you so much. Now we're going to move to the financial soundness requirements. So what are the specific requirements applicable to a Category 1 FSP that collects premium?
Okay, the first requirement that we will discuss is called the General Solvency Requirements. Basically, what it means is that the total assets of the FSP must at all times exceed the total liabilities of that FSP. However, FSPs should note that there are exclusions that can be made from the total assets and the total liabilities.
Okay, thank you so much. Mr. Moreku, what are the exclusions under total assets?
The exclusion under total assets for FSPs that collect the premium will be goodwill, intangible assets, investment and loans to related parties, and investment with or loans to person to whom the FSPs rendered financial services.
Thank you so much. Mr. Sebolai, what are exclusions under total liabilities?
From the total liabilities, the FSP can exclude what is called loans subordinated in favor of other creditors. So if there's any loan that the FSP has subordinated in favor of other creditors, we will exclude that loan on the calculation.
Okay, thank you so much. Mr. Moreku, are there any other additional requirements?
Yes, there are other additional requirements other than the solvency that Mr. Sebolai has already explained. The additional requirements for FSPs that collect premiums are working capital and liquidity. Working capital, we are referring to your current assets and current liability. Liquidity, we are referring to the cash that the FSP must have in their bank account against their expenses that they might have. Yes, thank you.
Oh, okay. No, thank you for that. Actually, I was actually coming to ask what exactly is working capital, but I see you have already answered that one.
Yeah, it's much better to explain it at once because, yeah.
Okay, thank you so much for that one. So what should Mr. Sebolai, what should an FSP do if it realizes that assets exceeds liabilities by less than 10%?
Okay. When the FSP notices during its assessment of its financial position, they notice that the assets exceed the liabilities by less than 10%, or the current assets exceed the current liabilities by less than 10%, then the FSP is required to notify the authority in writing, to notify that their assets or their current assets exceed current liabilities by less than 10%.
Okay.
So it should be a notification to our office in writing.
Okay. So when does when is the FSP required to send that notification? After how long?
Immediately when an FSP notices that their assets exceed liabilities by less than %, at that moment, okay, then they must notify the authority in writing.
All right. Thank you so much for that. Now we'll discuss the applicability of FAIS Notice 123 of 2017. So can the funeral parlour, which is an authorized FSP, rely on the exemption of FAIS Notice 123 of 2017? Mr. Moreku, yes, please.
Yes, they can rely on this FAIS notice. However, there is some exemption condition attached to this notice that they need to meet first.
Okay. Thank you so much. Hey, sorry to interrupt. You wanted to say something?
No, you may continue. It's okay.
Oh, okay. I heard you have mentioned that there are conditions that FSP needs to comply with under the exemptions that we mentioned before. Mr. Sebolai, can you please tell us what are those exemptions that the FSP needs to comply with?
Definitely. One of the exemptions, or rather the conditions that the FSP must comply with if they want to rely on the exemption, is that the FSP must at all times comply with the solvency requirement, meaning the assets must exceed liabilities at all times. And then the second one is that that FSP must have a written mandate from the insurer to collect premiums. So at all times that written mandate must be in place, and the FSP must annually obtain written confirmation from that insurer that the mandate is in force and active for the period being. So let's say if the FSP submitted financial statements for this year, confirmation would state that that mandate was in place and effect for that particular period. I will hand over to Fortune to take FSPs through to on the next remaining conditions that the FSPs must comply with.
Thank you.
Okay, the FSPs, if the FSPs are complying with all the requirements that Mr. Sebolai has already explained, if they comply with all that requirements, the FSP does not have to submit the Section 19.3 report, the report about the separate bank account. I'm not sure if I've covered almost everything that was left by Mr. Sebolai. You may chip in if you feel like maybe I've forgot something in here.
And the mandate concluded between the FSP and the insurer must also state that any payment of a premium to the FSP shall be deemed to be payment to the insurer.
Oh,
so
okay.
Those are the conditions that the FSPs must comply with if they want to rely on this exemption.
Okay.
Yes, just to finalize this discussion, if the federal parlor or the FSP fails to comply with any of the conditions that we discussed about, the FSP cannot rely on the exemption. So the FSP will be required to submit or to meet the fit and proper requirements for this specific FSP if they fail to meet any of the conditions that we discussed about.
Oh, okay. Thank you so much for that information. I think we've reached the end of our discussion. Is there anything that maybe you would like to share?
Yes, with regard to how to complete the Annexure A, we have attached the example at the end of our presentation. And we have also attached how to calculate the liquidity. So the FSP should be able to refer to those attachments, and yeah, should they feel like they are not sure on what to do, they are also welcome to contact us. Thank you.
Thank you so much, Mr. Moreku. We've reached the end of our discussion. I would like to thank everyone for your time. And as Fortune has already said, you are more than welcome to contact us. Should you have any question, we'll be gladly, you are welcome to ask those questions, and we'll be happy to assist. Thank you so much.
Thank you.
Thank you.